rent, we have the one rent earned, $1,500 in transaction B. So let's put that in. And of course, that's going to give us total revenue. So our total revenues will be the sum of those three. Whoops. So total revenues of $9,600. Then our next heading is going to be expenses. And we only have one kind of expense. Click on expense. We have advertising expense. That's all there is. We have several items of advertising expense. So we have transaction D, 750, plus transaction F, 1,000, plus transaction G, which is 500, plus transaction I, which is 1,250. And that's all there is. Then we have total expenses. So headings and totals once again. Total expenses is just the 3,500 again. And then in future we'll have earnings before interest and taxes, and we'll have we'll have interest expense, and we'll have taxes, and we'll have a bunch of other pieces. But at this point we don't have any of those, so we'll just pick net income, and our net income is going to be 9,600 minus 3,500, which is 6,100, which is, interestingly enough, the retained earnings before we pay our dividends, which is consistent with what we'd expect. And now so that's the entire income statement. We have all the revenues and all the advertising expenses. And so now we go to statement of changes in equity. With the statement of changes in equity, we start with the opening balance, and it's 0 in all three of them. And don't let me forget to fill out the rest of the headings here. We'll need to do that before we're done. And if I don't, I am going to have lots of red stuff, and I don't want red stuff. So headings and totals, we have the issuance of shares, which was 55,000. And under retained earnings, we're going to have net income. So we have net income, and it was 6,100. And we also have dividends. So we have the dividends here. The dividends were minus 1,100. Whoops. And then that gives us the balance at the end, which is balance